Hello traders, how are you? Happy weekend. Vladimir here from Traders Academy Club, and welcome to the weekly Forex forecast. Today we are preparing for the trading week starting on 13th of November 2022. In today's video, I would like to share with you two very interesting opportunities. The way I see that will be the gold and the euro dollar. Both are reacting dramatically to the recent CPI report published in the US. And I would like to share with you all the technical things happening and what do I expect to see from this one. But before I go to the chart and start to explain everything, if you are new to the channel, welcome to our amazing community. Please subscribe to the channel with the subscribe button below this video. Also, I would like to remind you, you can download these indicators that you can see on my screen. The virtual trading pen, the one that I draw is on my screen. The KTLI, the key trading levels indicator with a multi-control, multi-time frame control directly from the chart. Based on volume profile, you can download all these indicators and many more other tools with the links below this video. Just go to the description below the video and you will find the direct links. Okay, many of them are available also for free, so just follow the links, download, install, and enjoy. You can also go directly to the blog vladimirribakov.com, go to my strategies and courses, in-house indicators, and you can choose here the instrument or the instruments you would like to download. As I said before, many of these tools that we already have and we continue to add are available for free. Also, very important to remember, on Mondays we publish weekly forecast in text version. Okay, so just come back on Monday and you would see the text version of this weekly forecast. So now let's go to the chart and let's talk about what do we have. I have to start with that I really hope you followed the last week two ideas we discussed. This was the silver buy the dips. It was right here. And the dollar CAD sell, where we were talking about the break of this line. If you didn't watch this video, make sure you go to the channel and find this video and watch this video, because I explained there some very important techniques, how and why these trades were chosen, and they delivered. So I really hope you managed to enjoy them. And now let's talk about the gold. So after failing to make one more low, this was here, right, with this channel. This was my trading plan. I was looking a couple of weeks ago. I was looking to go and to make the sell here to the bottom of this channel, or at least to retest this supportive line. However, the gold had different plans, and after being blocked by triple bottom and a bullish divergence on the MACD, on the moving average of the MACD, what happens since is that we break this falling resistance line or the channel to the upside. So if we take this channel and we duplicate it upside, this is a very logical first target zone. For longer run, it could be all the way to the second duplication level. Now let's talk about the momentum it currently gains. So it managed to break this little consolidation at the end and starts to make higher highs. So after the double bottom, it validates a beautiful breakout. So if we duplicate the double bottom or triple bottom in that case to the top, this could be a legit target. And I love this target because it fits with the previous swing high and the resistance we have here. This is a classical zone, but look what happens slightly above. Look at this volume. You see this volume? This is my volume profile based indicator, KTLI, key trading levels indicator. Make sure you download it if you still didn't. Below this video, in the description, you will find a direct link. Okay, this is absolutely beast for levels, and this is a key zone here, also a volume, but look at this supply here and here. So there is a great chance that after small pullbacks at the beginning of the next week, gold will continue all the way to the next significant highs. So my plan here is exactly that. Going down to the lower time frame, the 4-hour chart, we can clearly see that gold is building pretty convincing trading structure to the upside, where the buyers create higher highs, higher lows. Okay, pullbacks should provide a beautiful continuation upside later on. Okay, until the market will complete higher highs on the chart, reach the daily key levels we just saw, and we will start to see the slow down conditions where the market will make higher highs, but the MACD moving average will start to make a slowdown and create lower highs. So this is what I would expect on gold on the current market conditions. Let me know, what do you and how do you see from gold, and what would you expect from it to reach what levels? What would be your target zones, and how do you look to trade it? Please share your views in the comment section, and thank you very much in advance, of course. And I would like to ask your support, guys, and your help. If you find this video useful, helpful in your trading, then please show your support back. Hit this little like button below this video, and also a few words in the comment section as a feedback would be very much appreciated. This is how YouTube algorithm works, so your help is very much appreciated, needed, and thank you very much in advance to all those of you who take the time to support and to help. The next one would be the euro dollar, another one that bounced amazingly as soon as it dropped below the parity level 1, and after creating the bottom and a bullish divergence on the histogram, the price bounces upside. The biggest question here, and I already started people talking about 115, 120 or higher, so I don't claim it cannot happen. I just don't think it will happen on this run, because let's face the facts. What happened this week with the CPI report, which surprised many, it's not showing that the inflation is over. Okay, the pace could slow down a little bit, but it does not mean it's yet not super high. And it does not mean that it's all over and everything behind us. And it does definitely not mean that the Fed will suddenly stop increasing the rate. The Fed might continue to increase the rates, just on lower pace. So I do think that the current anti-dollar reaction is normal, because after such a heavy pro-dollar period, the traders simply feel a relief to see such numbers, and they go all in against the dollar. However, every party eventually comes to the end in the market, and I believe that this amazing run will start to slow down and create a balance. So I do think the euro dollar still has the room, and ideally I would want it to reach this zone here around the 106, 107. Maybe even slightly higher, close to the 110, 111, to the massive weekly volume. But that's pretty much it, because we cannot deny that the trend is yet bearish everywhere on the weekly chart, on the monthly chart. So yes, the short-term reaction is very reasonable, understandable, and maybe even, very welcome. However, I don't think it's here for a long time. And I believe as soon as we get to these key zones, the weekly chart will create a bearish hidden divergence, which means lower highs on the price and higher highs on the MACD histogram, and it could hint then the sell-off comes. But why to think about so long? Let's try the here and now, and the here and now is massively bullish. So at the end of this, the daily beautiful channel that we've had here, okay, it managed to make the breakout and reaches approximately to the duplication. The next duplication level could be slightly higher, as we discussed before. But the interesting part is look at the series of these lows and highs. They are pointing upside here, higher highs and higher lows. And the interesting part is there is nothing that looks like it's over. The MACD screams upside. The RSI screams upside. The currently tested resistance could become very easily, a sweet memory been broken and then become a support before the continuation. And this is exactly what I would anticipate from the euro dollar. Taking a look on the first leg and the pullback, I would expect to see here this to be a second leg pullback and further continuation. Exactly like with the gold, I believe that we should see the pullback and then another final rally until a bearish divergence would start to show and build, which means higher highs on the chart versus lower highs on the MACD indicator, which will simply indicate that, yep, it starts to slow down. But until then, and as long as the momentum continues keep going, it's time to, of course, look to join the party and buy the pullbacks. Unless something crazy happened on the market, the buy the pullbacks could still be the correct, relevant plan here. So that's pretty much it for this video. I would like to take the time and to thank you for watching this video. I hope you find this video useful. And I invite you to join us to our trading family, Traders Academy Club. Enjoy from our free VIP price action course, real-time trading education, and real-time trading opportunities, and amazing trading community. Join our family with the link below this video in the description. And if you have any questions about anything I just explained, or you would like to ask about any other instruments, if I have a view, I'll be more than happy to share it with you. So once again, thanks for your time watching this video. I wish you and yours all the very best. Good trading, and I'll see you soon with more. Happy weekend and good trading.